Hello, I'm Russell Dow, President of Dow Wealth Management, and I'd like to talk to you about the fundamentals of wealth management. More specifically, my presentation is on how my company views the investment landscape and the challenges that investors confront. I will then describe for you how we seek to overcome those challenges for our clients, enabling them to have rewarding long-term investment experiences. First, a few comments about myself and our company. Dow Wealth Management is a closely held, family-owned firm with offices in Falmouth, Maine and Bradenton, Florida, just north of Sarasota. Depending on how we might view the situation, I have either the good or bad fortune of coming from a family that has been especially involved with the securities markets. The Dow family is now in its third generation in which we've devoted ourselves to the investment business. We think it is perhaps a genetic condition. It's our family's all-consuming passion. My grandfather and his two brothers started their careers as stockbrokers back in the 1930s, joining together as Dow Investment Group in 1937, during the Great Depression of all times. In time, they each had sons who joined them, one of whom is my father, Clifford Dow Sr. Much of what I will discuss emanates from what he has taught me over the years. Along with myself, today my father and three brothers are all active in the securities business. As for my personal background, I have an economics degree from Cornell University and a law degree from the University of Connecticut. Despite that background and my business title, when asked what I do for a living, perhaps the best response is that I'm a computer programmer. I founded Dow Software Corporation and have spent much of the past quarter century writing software to help analyze companies' financial data and manage client portfolios comprised of financial securities. A uniqueness of our business is that because it has involved so many family members who have focused on the same subject for so long, our collective effort has enabled us to develop a highly refined investment approach. And that approach has become increasingly supported by substantial technical capabilities, an asset that's critical to successful portfolio management in today's world. Here's what we do. Dow Wealth Management assists clients in the management of their family and corporate wealth in the securities markets. That is our specialty. The management of securities portfolios, which typically include stocks and fixed income investments. Our clients rely on us for advice and guidance to help protect and grow their portfolios. In most instances, we're responsible for most of their investable assets. Their faith in us is an honor, and we take that responsibility most seriously. Our clients include individual investors and their families, corporations, trusts, and nonprofit organizations. In this period of recent financial crisis, the safety of client assets is a common concern. Our accounts are custodied with the Bank of New York's wholly owned clearing firm of Pershing. With over $24 trillion in assets under custody and administration, Bank of New York Mellon is one of the largest and strongest banks in the world. The reason that the investment approach that we advocate tends to be well received, I think, has to do with the fact that Dow Wealth Management invests traditionally. In many ways, we invest as my grandfather invested, while the rest of the financial world has changed its approach, frequently in ways that have not benefited investors, or worse, have caused more harm than good. As I'm sure you're well aware, when we survey the landscape of the financial industry, it's littered with formerly prominent investment firms and investment funds that have gone out of business. That observation alone is testament that many newer investment strategies strayed badly from the lessons of history. The fundamentals of sound investing simply tend not to change with time and so cannot be ignored. Those who have been around long enough know this implicitly. It is also worth noting that the principles of good investing are universal. They apply equally in Europe as in the GCC and just as much in Asia as in the United States. So what I'm going to discuss does not apply only to investing in the U.S., but rather to wherever we might place our money in a free economy. The underlying principles of capitalism and unrestricted financial markets are the same wherever we may be. Dow Wealth's investment philosophy has always been grounded in academics. Our approach is disciplined and reliant on fundamentals rather than any human's predictions or conjectures about what the future may hold. As you will see later, unlike many investment firms, we don't put our faith in analysts' abilities to predict the future. Although Dow Wealth continues to evolve its investment approach and refine our capabilities, we have always remained true to our roots and focused on our investment principles. A well-honed and rigidly implemented investment strategy that is supported by 76 years of experience in academic research, using 200 years of investment data, has served our family and clients well. Also of significance, being in the business of helping other investors has provided us with a unique vantage point that is not available to the typical investor. Specifically, we've had the privilege to see in detail how many others have invested, some successfully, others not so fortunately. It's fair to say that we've probably seen just about every investment strategy out there. We hope that our in-depth and long-term family involvement with the securities markets has made us wiser investors. It has at least made us more opinionated and dogmatic about what we believe are the good and bad ways to invest. Today, I would like to share with you some of what we Dows have learned. I hope that it will help you become more successful investors and better stewards of your own family's wealth. There are 3 topics that I wish to address. Part 1. The life cycle of family wealth, accumulation, preservation, and the growth of mature wealth. Part 2, defining the investment problem, the Dow Wealth Management analysis. And Part 3, the Dow approach. Now for Part 1, what I like to refer to as the life cycle of family wealth. Because of my profession, people come to me after they've already accumulated sizable portfolios. An observation that's probably not lost on any of us is that the ability to accumulate wealth cannot be taken for granted. Therefore, we can't assume that if we lose a substantial portion of our savings, we'll simply earn it back. Prosperity and dynamic growth opportunities don't last forever, and it can be a decade or longer before the next high-growth period arrives. If we're speaking of family wealth, the individual responsible for creating the wealth originally may have retired or passed on. Consequently, a focus on preservation of wealth must lie at the heart of any long-term investment program. It is also worth noting that the skills used by a person or corporation to amass wealth often are quite different from the skills and knowledge base that will be required to ensure the preservation and further growth of those assets. Therefore, for long-term financial security that might last through retirement, or for generations in the case of wealthy families, it is essential to transition successfully from a wealth accumulation phase to a new phase in which they focus on preservation and growth of mature wealth. Those who get it right ensure the financial security for their retirements and possibly future generations of their families. Those who get it badly wrong just once might never get a second chance. For most investors, as they prosper, the goal of wealth preservation starts to become increasingly important relative to wealth accumulation. At the risk of stating the obvious, growing a portfolio from $1 million to $1.5 million might not greatly improve an investor's lifestyle or sense of well-being. But if he happens to lose his estate and then need to go back to work, he's apt to feel rather distressed. Much of my job then is to help educate our clients about investing, giving them a perspective and how to view the financial markets, to understand the challenges that they are sure to confront, and how to take advantage of them rather than to be victimized by them.